Hello and welcome back. This is David from the Personal Finance Squad. We just finished up the end of Chapter 2. We went through the supplemental exchange of how money goes back and forth between accounts. Money going in for childcare, for example, to go pay money into the supplemental because it came under the projected amount. And putting money back into the gas utility to the account because it came up short. So at this point, we just want to do a quick review of Chapter 2 so we can get on to Chapter 3 and really start grooming this budget. So it's just some highlights here, some main points we want to talk about. Budgets change every month. The main piece, the foundation of the budget doesn't change, but there's just some things that can happen on any given month that you're going to have to do little additions, subtractions, little things you didn't think about with bills, or sometimes you have more money coming in for other reasons, or just things you need to do. This requires a lot of discipline. You have to look at it on a monthly basis. You can't just balance your money once a month, because if you have several transactions and you come to them at a certain point where it's going to take several amounts of digging and checking back and forth, so you want to really make sure that you do this every once or twice a week. It just depends what works for you, and maybe the amount of expenses you have in a month may determine that, but you do not want to blow this off. You just got to keep your nose to the grindstone and get it done. And that goes for this part right here that I wanted to point out. I've also talked about the credit card to pay bills. That's another maintenance feature. You might have bills that you pay for under the credit card, which means you have to go and check that. So not only are you checking, maybe going back and forth with your supplemental between your main bank account, you're going to have the credit card to go back and forth between your budget sheet to go find out what bills applied there. So a couple key pieces here in the budget maintenance, our little checklist we have at the end of each chapter, is that we talked about determining the due date of bills and when they are considered late. So there's a difference between a bill that says is due, for example, on 4/12, but it is late on 4/16. We've talked about the mortgage example, where almost every mortgage company that I know of says that the payment's due on the 1st, but it's technically considered late on the 16th. So a lot of people will set up a automatic payment to come out on the 12th or maybe even the 15th, again, for a cash mitigation. Certainly it's very important, if you don't do this already, or if you're a student getting into this, is to set up automatic bill pay in any circumstance that you can do it. The number one thing right here is that it will avoid late payments. You don't want that. You don't want to mess with it. You know the money's coming out. It is rare that a company who has an automatic bill payment doesn't take the money out when it's due. And if there ever was something that went awry that they didn't do that, you can certainly call them up and get it mitigated, get it figured out. It'll be fine. So that leads into this piece right here. The reason for automatic bill pay lets you know where you're going to have shortages. So if you can manage bill due dates like we just talked about with the mortgage, you can move those around to set up to make sure that you have the cash flow necessary to pay for everything, so that you don't have to worry about being short at a certain point. And so again, this also will come from setting up the budget itself, but as with like the supplemental account, the whole point is to make sure that the money is there for when the money is due. And then this last piece right here is a separate spreadsheet to track the leftover items. Jasper's at 703 at this point. He may want to have a separate sheet that's saying, he spent on coffee and at the deli and wherever he may go. And he may have numbers under here. And he may track it there to see where his spending is at. Or he just may say, listen, I have $703, and I know that I checked my bank statements online and I see that I spent $20, and I'm just going to take it off there, and now my current balance is $683. Personally, I tend to do this. When you're managing your money, keeping an eye on it, you're going to know where you're at. You're going to have a good handle on what this number is right here. So again, it's your option of how you want to do it. Some people want to know what their spending habits are. So you can see if you actually do this, and you actually do the supplemental account, and you have a credit card to pay bills, and then you got to go back and forth. So again, you have a savings, you have a sup, you have your online bank, and you have your budget sheet and credit card. That's a lot of tracking. Chapter 2 is budget maintenance for very good reason. So this is the way it goes. You got to remember that This is a personal business. This is your livelihood, so you have to put the time in to do it. Doing so, you will be in great shape. You will know what's going on. You will handle most unforeseen problems. You will make sure that your bills are paid and then you're taking care of yourself for your future and your current state to enjoy yourself for the hard work that you've put in. Okay, this has been great. We are finished with Chapter 2. We're going to get into Chapter 3 and really start refining the budget and getting it down where we really see the 12-month cycle built out in our bills and expenses and how to manage that money back and forth between the main account and the supplemental account. So thank you, and we will see you then.